When you're strapped for cash, it's tempting to raid your retirement savings, and many young Americans are doing just that. 46% of millennials are taking money out early from their retirement accounts. That's according to a new bank rate study. And as if that's not bad enough, 43% of them never even had a retirement account to begin with. For more, we're joined by Cache.com reporter Dhara Singh. Dhara, good to see you here. One thing you should not do, obviously, is raid your retirement account.
Yes, you shouldn't.
Why are they doing this in these kinds of numbers? What are they dipping in for?
It's a combination of different reasons. Starting out with my story, we see someone named Steph Lagana. She had $50,000 saved in her retirement account. When it came time to switching jobs, she just had no other savings. Not only that, she got out of a 6-year relationship and just had nowhere to turn. So you don't have adequate savings. That's number one. Number two, medical expenses. That's one of the top reasons. You know, not everyone has family and friends to fall back on. And then number three is simply a lack of education altogether. Most people aren't aware that unless certain exceptions to the rule, like education or certain qualified rules, you're going to have to pay a 10% penalty, and that 10% penalty can actually turn out to be a big amount.
What about how they can avoid some of these penalties? Because you're saying that there are some exceptions. Break down for us what they are.
Right. So first of all, it's important to know that the exceptions for an IRA and then a 401k can be different. The similarities are in the case of death or disability, you can withdraw from your 401k without being penalized. But in the case of education or in home buyers, right, you want to take out up to $10,000 for your first home purchase. For that, you can take money out of your IRA and not be subject to that 10% penalty.
I read your piece, and you mentioned a 401k loan. What is that, and how can people use that?
Yes, so a 401k loan, basically you just need to show proof that there's this necessity for you to take out funds from your account. And actually, if there's a short-term need where you're not in a case where you're gonna lose your job, right? You need to take out money and you can pay it back before the next tax period. So if you're confident you can take out this money and pay it back, go with that 401k loan. And it might work in your favor because when you pay yourself back, you're gonna pay yourself with interest, so.
Right? Why not? Always try to pay yourself back, of course. Yeah. All right, Dhara Singh, thanks so much.
Thank you.
Appreciate it.
Thank you for having me.
And be sure to check out Cache. It's a new personal finance website from Verizon Media that helps people across all life stages manage their money milestones. The platform features educational content and tools to help you understand and make smart money decisions through calculators, explainers, and real-life stories like Dhara just shared with us. You can check it all out at Cache.com.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.